And let's talk a little bit about Intel. Those shares are higher as the CEO, Pat Gelsinger, retires. Effective immediately, the stock has lost half its value this year as other chip stocks have soared. Nancy, you've been critical of this company even before Gelsinger took over back in 2021. So I guess you are applauding this move.
Oh, it took too long, Tyler, I think is what I mean. I will say I think boards are acting much more quickly than they had been, and that's a positive. But in this particular case, you had a CEO who came in to do a turnaround. Instead, he went to D.C. hat in hand and spent his time doing that, looking for funding instead of innovating. And I think I was on your show when I said enough already, and we got out of the stock much higher levels. But it doesn't matter. It's been dead money for a long time, and I think it's going to continue to be.
Yeah. Let's actually dwell on this topic for a minute on Pat Gelsinger's departure and what is next for the chip maker. I'll bring in CJ Muse. He's with Cantor Fitzgerald. He has a hold on the stock, 25 price targets where it is now. CJ, it's great to have you here. I mean, just a couple of weeks ago, we were talking in stellar terms about NVIDIA. So what does one do with Intel now?
Yeah, it's a great question. You know, I think at the heart of, the board's decision, which, I guesstimate is where there was, a disagreement with the board and Pat. I think there's inherent frustration. But I would go back in time and say that, just in late August when they had the last board meeting and the press release they put out in September, clearly the board was 100% behind Pat then. So something has changed, I would imagine, in the last 3 months. I'm not sure. As far as what to do with shares, I think there's an inherent struggle at Intel. There's clear value on the product side, particularly in the client PC part of the business, which, is worth that. If you put 15 times, that's worth $100 billion just for that. On the other hand, the foundry business needs the volume from Intel to survive. And so today, Intel is planning to buy $9 billion of silicon from TSMC for the client business in 2025. But at the same time, they want and need to bring that back to keep Intel Foundry alive. So it's really kind of the chicken or the egg problem. And I think what it speaks to is that there's no easy resolution or solution here. So to the comment earlier, I do think it's dead money still.
This is kind of a two-headed company. There's the foundry business and then the Intel products business. Is it going to stay that way?
Well, they've separated as one company, but two divisions. I think one of the questions after this announcement this morning is whether they might push forward in a more forceful way of separating the two. But I would highlight that CHIPS Act money, requires that Intel product maintain majority ownership of Intel Foundry. So I don't think, clear-cut separation is doable, at least under kind of the current construct of the agreement with the CHIPS Act.